All right, welcome back to the Economics of Real Estate. This is our mid-month update because Matt, as we were rolling through our January update and looking at everything that happened in December, we fully acknowledged, hey, we're in a different spot this January than we were last January. Let's make sure that we watch this and check it out. And so we've done exactly that. We're coming back with an update on everything that's happened for the first half of this month in comparison to the first half of January last year to see how the market compares. Before we get into that, Matt, tell us a little bit about what we're in store for. Like, what stood out to you when we started taking a look at these numbers?
Well, I think one of the biggest reasons we wanted to look at this is, the market was saying, hey, December really picked up. Are we going to see this heading into the new year? And to be honest with you, I can't wait till February 1st to kind of see that data. I need to see it now. I need to know where we're heading. And what's kind of stood out to me is maybe things aren't as what they seem from what people are saying in the papers, what people are seeing online. The data speaks for itself, and I think that's what we have here to show people today.
Let's get into it. All right, taking a look first at York region. Again, looking at January 1st to the 19th, both years. Sold listings down in York region across the freehold property types, down 32%. New listings being up 40%. Sales to new listing ratio. So this is now the number of sales in comparison to the number of new listings that are coming out. Last year, we were hovering at around 48%. This year, we've dropped down to 23%, which is a 52% decrease. Median sale price is not too far off. So, I mean, that's good. And you and I have talked about this. For those that are still waiting for a big drop, that's already happened. The prices have come down about as far as they're going to go. You're going to get regular month-to-month fluctuation, a little seasonal fluctuation right now. But I think the big change has happened. All things being said, we've got more to talk about at the end of the year with what's going on south of our border. But Matt, I see prices holding, but at the same point, it's a very different market than it was last year.
It is, and it's the new listings that are starting to pile up and pile up quickly. We're up 40% year over year from January. This January is typically a month that's a little bit slow. It's cold out, as we can see today. They're waiting for maybe the spring to start putting their home on the market, but looks to me like there's a bit of a rush to get your property out there first because maybe there's a lot of sellers out there who are thinking, I need to be on the market now because I can't tell for sure how many people are going to flood the market in the spring. Maybe there isn't a big flood in the market in the spring, but the conversations I'm having, the data that I'm seeing, it looks to me that's what people are expecting.
Yeah. And now across all the big banks, renewals for this 6 month period, from I think it was like November to April, are up 80% this year in comparison to that same time frame last year. And I think that's something to be mindful of because a lot of those renewals are going to be coming in at more than double the rate that they likely had when they first got that mortgage. So it's just something to be mindful of when we're looking at, hey, what might happen with our inventory. And for those of you that watched our last update, when we talk about the Toronto board as a whole, especially in terms of active listings, we're up 48% year over year in terms of how we're starting this year in comparison to how we started last year. And that data is holding true in terms of York, and we're seeing it. We can't show active listings here because the way we pull the data for a mid-month numbers, we have to pull it manually. We don't have the benefit of the report to pull. And depending on which day we pull it, active listings are going to fluctuate. So we don't have that number to show you. But what we can see is that we're seeing that sales are down and new listings are up, and our sales to new listing ratio is dropping, right? So I think that's a key thing to be mindful of because as realtors, we always consult about, a lot of people ask, when's the best time to sell my house, right? And of course, it's very neighborhood specific. But when we're looking at the competitive edge that sellers would have had in January and February of last year, we saw multiple offers come back in a big way, even in a slow market. You know, the overall data is not showing that. Prime properties in prime neighborhoods, that's still going to be a thing. But overall, that's not what the market's telling us.
No, and what this is kind of forward projecting potentially is with the sales to new listings going from 48% to 23%. If this trend continues, the amount of homes that we're going to see on the market February, March, and April to the amount of potential buyers that are active in the market is going to be a lot different than what we've seen potentially from last year and years before that.
It makes me think of fall 2023 when all of a sudden we had a glut of inventory just sit on the market and the buyers disappear. And
Yeah.
we had a very, very slow fall that year. It's kind of crazy to see. Now, the condo market has been a talking point throughout the year, just with the sheer amount of listings hitting the market. We've had the highest listing inventory ever on the Toronto Real Estate Board in terms of condos, and we're seeing that decline there in sold listings in comparison to the same time frame last month. We're down 40%, new listings up 33%. Again, a further decline there in sales to new listings ratio of 46 to 21%. And again, median price holding very similar. And I think that part of that is really a testament to some of the growth that we saw in, let's say, bit of Q3, Q4 of last year in terms of some of that pricing.
Yeah, and I mean the condo market for the most part last year was under a lot of pressure. Um, at the end of the day, there's a lot of investors in the condo market. Their money is what actually builds these condos at the end of the day. If it wasn't investors buying up 70 to 80% of the condo buildings, to be truthful, they just wouldn't be built. So what they're doing is they're subsidizing those buildings as they're getting built over a 3 to 4 year period, and then yeah, they're turning around and they're selling them to the market or they're being landlords. But now we're at a point where people bought these 3 4 years ago, thinking that they were going to be locked in at a certain interest rate, and thinking that the price would be at a certain level as well. Both those things have come down from their expectations. So there is a bit of a glut in the market where investors, they're looking at a big negative cash flow if they rent, and some of them just can't afford to get the mortgage, so they're having to put these properties on the market. A lot of these properties are tiny, shoebox listings that were selling very well years back, not so much anymore. And I think that's what's having the biggest strain on the condo market in a lot of these areas are those really small units that are just falling out of favor.
Yeah, I think that skews the numbers a lot when it comes to the condo market. If you're looking at some of the more desirable or, like, let's say, areas that are suitable for condos, and have, like you said, family sized homes, yes, they have taken a hit, but not to the same impact that we see in the overall numbers. And the reason for that is end users, families that can either afford that price point or for their lifestyle, that's what they're looking for, they'll buy those ones. But what they're not touching is the super small square footage properties we've seen that were very much geared towards investors and single renters, stuff like that, right? So I think that's where we are. I've been watching Commerce Valley in particular. We had a sale there in September last year. It came out fairly well in comparison to the other stuff that was on there, and just watching the amount of listings that were our competition at the time continue to sit on the market. And a comparable sale just came out $40,000 less than what we sold for just last week. So again, that impact is still being felt. And when we see that when we see new listings increase and sales drop off, we usually see more of an impact on the price, especially in a month over month way, because people eventually they need to sell. They don't want to keep holding on to those, whether it's because they've made a purchase or because they want to offload it. Maybe it's a landlord, whatever it may be. Typically, to get that sale to happen, you got to drop your price. And that's what we're seeing, that trickle down effect in the market.
And the one interesting thing I want to highlight that we haven't seen in quite a few years now is that we're heading towards a market where interest rates are still as high as they've been historically since 2008. You've got all these people refinancing, and you've got the amount of new listings hitting the market that are quite substantial as well. And you've got buyers who might not have the confidence as of right now, just because of maybe what's going on with the US, with tariffs, with the fact that we're going to need a new prime minister. The Ontario government seems like it's going to go into election as well. So there's all these these factors that are all brewing at the same time right now, going into a spring market, which is typically, you know, the hottest market. That's where a lot of the confidence is for the consumer, for the buyer. So this is why we're looking early. We want to be ahead of the curve. We want to see where this market's going, and we're going to have to look at it super close to see where the trends are, and where it's potentially going to go on a monthly basis, so that we're always out ahead of it.
Yeah, and realtors, homeowners, buyers, it's so important that you are your local expert, that you are paying attention to what's happening in your area, because that's where you start to see the real trends emerge, as opposed to the overall trend that we're seeing on the Toronto board or a region, for example. There's a home in an area that I'm watching for my buyers. They just listed last week. They have offers coming up on Friday, and I'm just curious to see the amount of offers that potentially come in on this place, because it's priced maybe not super aggressively in terms of low. I'd say they're almost a little high for holding offers in terms of getting the traffic in the door, but we'll see. Right? I was there. I didn't see a lot of agent cards in the house for showing, so they might be getting tidied up by the seller. I don't know, but it will be interesting to see, did they get enough showing activity? Are there enough buyers looking in that pocket right now? And how many will step forward? Will it bring the result that they want? Or are they going to be one of the examples that we've already seen in January, where they held the offer date, didn't get the price they want, relist at a higher price? And that's just
Yep.
the reality. If you're not watching it, that's what happens.
Yep.
All right. Moving over to Simcoe. Matt, why don't you take this one away for us here?
Yeah, so Simcoe sold listings, they're down about 20%. New listings were just slightly up, just 0.58, 0.6%. Sales to new listings, 35 last year, 28 this year. So compared to what we're seeing with York Region so far, the one thing that we've been talking about all year was the impact that Simcoe had already seen from the buy side, the price side, the new listings on the market. They've kind of already had a huge chunk taken out of them in those regards. So we're starting to see their numbers look a little bit better, as far as, sales being a little bit closer, new listings not being as drastic.
Yeah.
And the sale price actually pretty close for Simcoe there. So Simcoe is telling me, at least in the freehold section, that they're really starting to be at the bottom here, and it's I would expect to see them starting to come out of this potentially before York and Durham, because York and Durham's prices were still quite elevated, and with the new supply that's coming on, we should start to see that slightly come down a little bit more, maybe.
Yeah, I think it's clear that their impact in comparison to York Region, not as great. We're still seeing that same pattern: decline in sold listings, increase in new listings, decline in sale to new, our ratio there, and then slight decline in median price. So that's holding true, but the percentages are not as great, right? We're dealing with like a 20% decline in sales to new listings, 20% in our sold listings. And yeah, I agree 100%. They've already taken their lumps. They're cruising now. They're already on their way to like the recovery zone, let's call it. Um,
Yeah, I think honestly, a less than 1%, new listings bump year over year is a great sign that,
yeah.
as long as sold listings continue to pick up a little bit, maybe in February and March, if new listings stay flat from last year, you might start to see some price appreciation in the Simcoe area.
In the Simcoe area. Agreed. So now talking about Simcoe for condos, sale listings holding pretty true for that first start of the month there. New listings again, just slightly, not too bad for them. Sales to new listing ratio, it's kind of holding steady. I mean,
It's
with
very
with the
steady.
numbers that we're looking at, it's pretty good, because you got to remember, like for the condos in Simcoe, it's a much smaller volume. So
It
when we're
is.
talking about a 16% difference or a 10% difference, it's like a couple of units. It's not massive at all, and your median sale price there again holding fairly steady. So
Yeah.
I think that they're just cruising along. Nothing drastic for them in terms of like how this year is starting in comparison to last year.
I know some people might say, "Hey, listen, it's the price is down 5%, but we're only talking about 30 units here."
Yeah.
Depending on if it was a lot of smaller units that sold, it can
Yep.
fluctuate the price quite a bit there. Like we said, the telltale signs are always the sold listings, new listings, sales to new listings ratio. When you start to see improvement on those ends, more sales, less new listings, you can almost guarantee that you're going to start to see the price increase as well.
Yeah, agreed. Rolling into Durham, kind of a similar story here in the sense of like a couple of big hits, but they had kind of maintained fairly well at the beginning of last year. So it's interesting to see this switch over now, where we are seeing that decline of course in sold listing as well as the sales to new listings being down almost 50% in comparison to last year. Price is holding the same. If Durham feels more like York at this moment in terms of how their market is starting the year in comparison to last year.
Yeah, yeah, I totally agree on that. At least on the freehold side.
Yeah. And now when we come into condos, you shared a very important first walk through it, and then we'll get to the other data that you were taking a look at for them.
Yeah, so sold listings last year 42, this year 41. So very, very much the same. New listings last year 142. We had 153 this year. Not a terribly high increase there as well. And then the sales to new listings 30% versus 21%. So a 30% change on that. And now the price, we have a 21% increase. When we go back and we look at last year, January 1st to the 19th for the 493, the average property tax on each one of those properties was around 2,500 or 2,800, sorry. And this year for the 41 that have sold, it's 3,400. So what's that's telling us is that the size of the unit is likely quite larger. And that's why we're seeing such a large increase in the price. Is just more higher end or larger condo units are selling right now.
Yeah, and I think that's the important part. The next step, when you see something that doesn't make sense in the data, you got to investigate it, right? We see a very clear trend across all the other areas, both freehold and condo, in terms of how the market's responding. And then to see something stand out so much with such a growth in median price, you're like, okay, what's going on different in Durham in the condo market? And again, looking at property taxes is a great way, specifically with condos, to take a look at it and be like, well, clearly they're bigger size units that are selling in comparison
Yeah.
to last year. And that helps justify what we're seeing in the data in terms of the price growth.
Yeah.
Yeah. All right. Now taking a look at all Treb, and all Treb for us, what that means, it's the regions of Dufferin, Durham, Halton, Hamilton, Peel, Simcoe, Toronto, York, and Brant. Um, so now we're looking at freehold across all those regions. And when we're looking at our sold listings, same thing, we're down 24% compared to the same time in January last year. New listings up that 34%, and sales to new listing ratio changing down 43%, from our 53%, so 1 and 2 essentially selling, compared to where we're at now at the 30%. And, you know, again, it seems to be holding a pattern. And that's one of the good things about when we look at it regionally is we're not getting lost in how one neighborhood is performing or how one small pocket is performing. It's giving you kind of, hey, what's the market doing? And I think that's what's so great about looking at these as we continue to zoom out. We see that the trend is holding true.
Yeah, I think it's important to see the market as a whole, uh, because if other areas are getting significantly cheaper, there's going to come to a point where a consumer's going to head over there, and it's going to take market share away from other areas as well. So even though a place like Aurora might see strong sales, low inventory, there gets to a point where you start to see the Simcoes and maybe the Hamilton area and the Halton area start to really roll over and become a lot cheaper. Like across the board, we're looking at 24% less sales in these regions as a whole and 34% more inventory. And sometimes, especially in this market, people are very price sensitive. They might be a little bit more willing to look at other areas now to try and chase those more affordable home prices.
Well, and that comes up so often, even in our office and coaching chats. We see that, right? There was conversation this morning, somebody asking about I've got guys looking in Keswick. Does anybody have any exclusive listings coming up? Anything in their back pocket that I can show my guys? And you get three agents chime in and say, "Hey, I've got a bunch of stuff coming in Barrie. How do you guys feel about the other side of the lake?"
Yeah.
Right? And if that buyer gets introduced to those properties and they see value there, that might dictate that they're, instead of looking on one side, they are going to check out somewhere else if they see the value for them.
And that's the conversation we've been having all year is, hey, listen, Barrie's really starting to move lower here. There's a lot of opportunity out in Barrie. And, if you want to own a home and be in a great area, that's going to have a lot of massive growth out in Barrie. There's going to be a ton of future growth out that way. It's a great place to consider.
Yeah. Yeah, absolutely. Looking at condo across all of Treb, yeah, sold listings down 30% in comparison to the same time frame last year. New listings up are 28%. Our sale to new listing ratio down 45%. So again, I feel like that's the condo market. That's the condo market. I'm almost a little surprised that we're not even seeing further growth in terms of new listings coming out, whether they be cancel and relists. I know I've had to have a couple of conversations this year with people and saying like, look, I know what your expectation is, but the market is just not there yet. And it's not serving you to be 90 days on the market with something that's not realistic. Right. And so maybe there's some people pulling back with those similar conversations with the realization like, hey, it's just not there yet. Right. I don't know.
Yeah. And I think as well, going back to, there's a lot of new condos that are going to come to market this year and next year. The Toronto area had some of the most cranes in the sky in the entire world for the last couple of years. That's starting to change now, but when you've got the world's most cranes in the sky, you're going to also likely have the most condo completions starting to come ahead, and there's going to be a lot of condos hitting the market as well. So these numbers are going to, increase. And the next chart after we're done talking about this highlights a lot of what we're talking about when it comes to brand new condos as well. So I think it's going to be another tough year for condos, especially the smaller size ones.
Yeah.
I think when we're dealing with family size 1, 2, 3 bedrooms, like a good footprint, good square footage, those will likely do pretty well. But with the amount of change that we're potentially going to see in the population, with the amount of condos and rentals that are going to hit the market this year and next, it's hard to see where the positive is for the condo market as a whole. But there's definitely opportunities there for those looking to buy their first home if it's a condo that makes sense for you space wise, that's on a little bit of the larger size.
Yeah, I think you summarized it so well. I think that overall the news is not going to be great for condos this year because it includes so many differently purpose built units, kind of tailoring more towards the investors than the families. And when you look at even what we pulled there in our Durham chart for the condo market, we're seeing an increase there in larger size condos selling. Right. So I think that's a clear sign that it comes back to being neighborhood and product specific, that there will be people that want to buy those, and it will be still just a fantastic time for sellers if you've got the right product when hitting the market.
Yep.
We've talked a lot about the cranes in the sky and the amount of units hitting the market, but as well, we've talked a lot about like all that pre-construction stuff that was happening 3 years ago. Like you said, people bought those with an expectation that their mortgage amount would be this and that hopefully their price growth would be this, and we've seen them actually operate in different terms. Our interest rate has gone up, and our pricing in a lot of these cases, talking to our real estate lawyers, they're saying there's a bunch that aren't even appraising, and now we're litigating to figure out what we're going to do on closing because we're unable to close on the property because one, it's not appraising, so we can't get our lending. Two, we don't have the money to do it, right? And so what that has now transitioned over to as we see more of these properties hitting the market is sales really just kind of falling off a cliff in terms of our new condominium apartment sales.
Yeah, for brand new, we haven't seen numbers this low since 1997, and a lot of this, just like you said, has to do with the fact that what was paid for the condo is the condo's worth less than that now.
Less than that.
Um, and one of the big things that I'm seeing is typically like 4 years ago, you would buy a condo above what the market for a resale was because you thought that in 3 to 4 years, the price of the condo would have gone up enough to surpass that amount you paid and give you a little bit of profit or some profit on top of that. But the problem now is, the cost of constructing condos has increased greatly. So to be able to sell a condo at that price that they need to now, with the market shifting the other way, is almost impossible to do. So
Mm.
what's going to end up happening though is we're going to stop building the number of condos we were. And at some point, we're going to undersupply the market in condos in the next couple of years. And we're going to see this loop likely continue as because Canada's population, though it's taking a back seat for the next 2 years, it's going to increase and keep increasing over the years. So um, what we're seeing with condos and even freeholds is we're not building enough right now. There's been a massive pause in that, and that
Mhm.
will have an impact down the road 27, 28, and 2029 for sure.
Yeah. Yeah, we're seeing those starts really slow down. And so this is one I don't want us to get in too deep on our call today because we're preparing for our February big market update, as well as these tariffs that keep getting talked about. First, it was going to happen day one. Then we came out and said, well, they're going to have their team look at it and decide if that's something that kind of continues to happen or if it makes sense. And then you got interviews with Trump doubling down and saying, well, no, February 1st, that's when I'm going to do it. And you and I had a brief conversation there about, well, there's almost two camps in the Trump administration. There's his team that doesn't really want to do it. They're kind of advising and they're putting out these press releases and saying like, hey, we're going to pump the brakes on this, make sure that we're talking to the right people. And then you get him on camera being like, no, we're definitely doing this. So
Yeah, I think it's, the Trump's old school negotiating mentality is just attack, attack, attack. And his team is are the ones likely having the conversations with the Canadian government and the Mexican government. And they might potentially be seeing some leeway in those areas. But for Trump, it's full steam ahead. You attack, you attack, you attack until you get what you hope and want. And I think that's exactly it. I think there's two camps here. One is trying to do it behind the scenes, do it properly, and Trump's just going for the throat. So we'll see what February 1st comes out with. It's just tough because you've got a lame duck prime minister and potentially government with the Liberals negotiating something. And I feel like if there was an election today, we would have an entirely different government in power. So, I don't know. It'll be interesting to see what comes out of it February 1st. We could get nothing. It seems a little less likely we're going to see a full 25% if they're giving us that much time. But it's still possible that we might see 5, 10, 15% tariffs on certain things. And it's very possible that the Canadian government retaliates with tariffs as well. So what this chart is showing, and this is from the Bank of Canada, is that if we did get a 25% tariffs, our GDP would fall by 6%. And when we look back at some of the other recessions that we've seen, this is right there with COVID only being the other time we've seen GDP fall that much. So this is something we're keeping an eye on, and we're definitely going to touch base on more next month.
yeah, and for those realtors that went through it kind of in the 80s there, I mean that was a minus 5.3 drop in our GDP, and we're looking at 6 here. So again, it's something to be mindful of. The next biggest drop being '08 with the global financial crisis, essentially because of everything that happened there in the U.S.
Yep. But
And
even
then
look at the 1990, the 1990 pullback at 3.4. That had an effect on the housing market.
yeah,
So
that
even if
last
we were
that
to get,
lasted forever. Felt like.
yeah, and so if we were even to get, a 3% pullback, maybe we're going to feel something as similar as we did back in the 1990s. So it's nothing's in stone here. I think it's something people are keeping an eye on, and it might be affecting whether or not they would jump into the housing market because they want to see. Maybe they work in an industry where the tariffs would really affect them, and they're not sure if their job would be impacted on this. So it's definitely data we're looking at, and hopefully by next month we don't have any tariffs. But if we do, we've got the data to try and potentially suggest where the market might go.
Beautiful. Last thing there about the '90s, as somebody that has both parents were realtors back in the '90s, that's all I hear about. How challenging the '90s were to get homes sold, the things they did, the length of time a listing was on the market. So while I was there in '08 for that, I was like, oh man, the market's really changed. They're like, yeah, you haven't been through the '90s. 2017 came, you haven't been through the '90s. COVID comes, you know nothing. You got to go through the '90s.
Yeah,
So
you got to go through that.
hopefully this doesn't happen, and I don't get to figure that out firsthand how the '90s really were in comparison. But I thought that was funny to take a look at. And let's move on now as we talk about that. And funny enough, pulls us back to '08. When we're looking at where we are currently in terms of our bond yields, which impact our fixed rate mortgages, we are back to where we were in '08. And as you've so well put on here, the average price of a Canadian home in '08 was $315,000. We're now at $676,000 with the same borrowing costs.
Same boring costs, but we've sure people have had pay raises since then. Has their pay gone up 115%? I don't know that that's the case, but it just goes to show, this type of a mortgage rate in 2008 was a little bit more sustainable than when you're carrying almost 115% more of a mortgage in today's day and age, especially going through a time where we've seen large spikes in inflation with all your other costs going up as well, taking away from your paycheck. So this is why it's important that we get these interest rates down further so that people's debt loads are manageable.
Yeah. And it's interesting that it's the bond market where we're seeing that uptick in, and that's going to filter into what we're seeing with the Bank of Canada announcements. And so we'll get to that in just a second. I think the last takeaway for people looking at this chart now is, yeah, this is a Canadian home in terms of average price of $676,000. For those of you that are watching us where we are in Ontario, the GTA, Aurora, Newmarket, York region, that's not our average price.
Nope.
Everybody that's buying their single family detached home now are looking at much higher prices with those same borrowing costs that we saw back then. And our extremes now compared to '08 in terms of what the big homes or the big family homes are selling for is much more drastic than it was then.
I think there is a lot of people out there that have an $800 to $1 million mortgage. And when you're paying rates not seen since 2008, it's a very large strain.
It's a big hit
on the finances.
It's a big hit. So this is great. We've got an updated look as of January 21st in terms of what we think the market's looking at, or what's the market betting in terms of our future rate cuts. And so now, end of the month, we've got our January meeting coming up where the Bank of Canada is set to make that announcement. And when we looked at the January 5th data, I want to say we were in the 90s for this cut to happen. And now we've dropped down to 64% chance that we're going to move from our 3.25 down to 3%. The difference that 3 weeks can make, right, in terms of what the outlook is in terms of those potential cuts. And I know that a bunch of that, you and I talked a little bit about the CPI data, the inflation numbers that are coming in, as well as, of course, what's going on south of the border and what our anticipation might be there. So, yeah, it's dropped off a bit, but if we don't get it in January, currently it looks like that cut will come in March.
Yeah, I mean, at the beginning of the month, we were going from 3 cuts this year, and now we're at 2. And if we get into a trade war with the U.S. and we put tariffs on American product, it's possible that we don't see any rate cuts, at least from the bond market perspective. From this perspective, Is it possible that the Bank of Canada will cut rates anyways? Yes. But as far as what the market's telling us, that as of right now, the Bank of Canada only really needs to do two rate cuts this year because they think that inflation is going to potentially be a little bit stickier than what was originally expected or even what was projected just 2 weeks ago. So this is something we're keeping an eye on here. Because like you said, it was a 90% chance and now we're at a 64. What's another week going to do? What's Donald Trump going to say tomorrow that's going to, throw this for a loop? So
Yeah.
definitely something we're keeping an eye on that, hey, you know what? I know a lot of people are hoping for a lot of rate cuts here, but, depending on if you're going to go for a variable or a fixed mortgage, you need to have a conversation with your mortgage professional and say, hey, listen, this is some of the data that we're seeing. Should I go for a fixed? Should I go for a variable? We're at a point now where variable, like you said earlier, could potentially interest rates could tick up.
Yeah.
Right?
Yeah.
There's conversation, and I think you said it was with Scotiabank
Scotia.
or
Yeah.
Scotia had said maybe later in the year, it's always possible, depending on what's going on in the world, that we could see interest rates increase. So maybe things have shifted to more of a fixed rate approach over the next 2 to 3 years
Mm.
until all this sorts itself out, and you can comfortably lock yourself into a variable or a longer term fixed.
Well, in our previous graph and other times where we look at the bond market, we have seen an uptick there, and that has been reflected in the fixed rates. And we had a call earlier in the month with one of our preferred mortgage specialists, Nicole Ferrugia, and she came on and said, one of the biggest challenges I'm facing right now is the news and agents are telling their clients that we're in a declining rate environment, which has been true when it comes to the Bank of Canada rates. But that is not always reflected in the fixed rates, which is what most people want to see because they like the stability that comes with it. And it's still lower than the variable rates at the moment. So it kind of makes sense there. But
Yeah.
there's been that uptick. So she's like, now I gotta have a conversation with somebody where they've been thinking one thing, they've been told one thing, they're meeting me, and now I got to be the bearer of bad news. And they're like, well, are you sure that that's true?
Yeah.
Right. So again, that's just part of the thing, that part of the conversation. And again, why you always got to speak to the specialist, because at the end of the day, they're the ones that are helping you arrange your financing.
Yeah, and the great thing about Nicole is she's following all these statistics all the time. She's always up to date on where fixed and variable are potentially moving based on the data. So she's always a great resource to talk to.
Yeah, absolutely. So we see our cut potentially happening then by March. And if the follow up cut, 98% chance that cut comes as of June currently. But like we said 3 weeks ago, less than 3 weeks ago, on January 5th, these numbers were different. They are subject to change. So it's just important to watch. And why you and I like to watch it is because, like, it's kind of the health of the market a little bit. Like, where's everybody at? And you and I, we took a look at consumer confidence reports that were coming in. And it was interesting to me that though it's been declining, we saw, like, over the last couple of years, obviously with all the inflation and all of that, the chart's going this way. But we saw an uptick in August, and then funny enough, it declined again at the end of November after the election results. And sure
Yeah.
enough, a lot of the stuff that we're talking about now, because of all the rhetoric that Trump likes to put out there, he doesn't instill a lot of confidence in the market because he's all over the place. You never know what he's going to do. And like you said, he's a little old school in his negotiating tactics. He comes on super aggressive. Even his
Yeah.
team isn't necessarily in line with him. And so what does that do for our markets when people are like, I don't know what's going to happen. Are we getting tariffs? Is my industry going to get decimated for the next little bit? Am I going to lose my job? You and I talked about, does that mean that the government goes back to printing some money to support those corporations so nobody does lose jobs? This is just kind of all that conversation that we need to have so that we can kind of keep an outlook on what the market might look like.
Absolutely.
Yeah. All right. Taking a look at purpose-built rentals. This has been on a hockey stick curve. We were
Yep.
flat kind of for so long, and now we've really started upticking, specifically in the last couple of years and coming in. Look at that increase that we saw basically 2023 to 2024.
Yeah, we
Um,
went from 70,000 units to 90,000 units uh, in just 1 year. So we've seen, and what we are seeing, so we're getting into this another side where we're starting to see that the rental market is softening a little bit. And a lot of this has to do with we're getting a huge supply of rental purpose product on the market.
Mhm.
Also on the condo side, like we were saying, even though it's a condo and it was purchased, a lot of people, a lot of investors use that as a rental. So we're seeing a double edged kind of sword with the purpose built and the condo side and freehold to be fair, starting to hit the market. Um, and what's concerning is if we go to the next slide, that in the third quarter of 2024, over 250,000 non-permanent residents left Canada, which was an 85% increase
Yeah.
from the previous year, which was the largest outflow of non-permanent residents in a single quarter in Canadian history. We don't even know what the fourth quarter of 2024 looks like for the potential outflow. So what we're seeing here is 250,000 people have left the country. When it comes to non-permanent residents, these are students or individuals that have come to Canada to work. A lot of them are single. So they were taking up a lot of these condos that were bachelors or shoe boxes. So that's why we really think that segment of the condo market is going to be under some pressure. But what we're seeing now is we're getting all this supply in, and we're starting to see people dissipate from the country. We're going to start to see our immigration levels slow down to a negative over the next 2 years. And then in the last slide, we can see here that this is from rentals.ca and Urban Nation. The average asking rents for all residential property types in Canada ended down 3.2% compared to the end of 2023, falling to a 17-month low of 2,100 or $2,109 in December for, I believe it was a one bedroom. But what we're seeing here is across the board. Vancouver, one bedrooms down 7% year over year. Burnaby down 9%. Toronto down 6.4%. Mississauga down 4.6%. So we're starting to see a softening in rental prices for one and two bedroom properties as a whole. Of course, like we always say, location, location, location. Those will always do a heck of a lot better.
Yep.
But as a broad market, you're starting to see some big weakening here.
Yeah. And speaking about location, 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 look at the growth we saw in Halifax, an increase of 10% year over year for the one beds, followed up by 11.2% there year over year for their two bedrooms in Halifax. So interesting to see that Halifax out on the East Coast is doing quite well.
There is quite the exodus we're seeing happening to the East Coast. I've had friends of my own move out to the East Coast. They absolutely love it out there.
Yeah.
And it's just more on the affordability side. It's the quality of life for some. They feel like they'll never be able to buy a house in Ontario, unfortunately, and they're relocating out there where it is affordable. But if too many of them go out there, it's going to be just as expensive out there than it is here.
Yeah. And I mean, even with that growth, that still puts them down at 11th place when it comes to the cost of a one bed.
Yeah.
Two bed being a little bit different. They'd move up that chart just slightly. But
Yeah.
yeah, nonetheless, I think that that's important to look at. And when we go back to our last graph there before we take off, you know, this, well, because of that, but this amount of new purpose built rental completion coming like quite steeply here, it just makes me think about our government always seems to be too little too late. We've been talking about the growth in rental prices and affordability challenges and where does everybody live for years now, like years back in the teens for sure. And and now it's all coming to a head after they ramped up here, they really ramped up immigration to levels we'd never seen before. And now they're counteracting that after they finally adjusted and started to get all these things built because it took so long to get them built. And now we have people leaving, which are some of the primary renters that would be that living in these types of properties. Um, it feels too little, too late. I think the good thing is that it should bring down rental prices for people, which is great because we want to make sure everybody's got a place to live. And the counter argument that always comes up, the pessimists online are going to say, live in Canada and own nothing, because that's kind of what it feels like sometimes. And when you're looking at that data, we're building a whole bunch of now purpose-built rentals, and we are a bunch of people are leaving the country that would be occupying them. So
Yeah.
take with
We
that what
we
you will.
also live in an unfortunate situation where we need mom and pop investors to buy condos and freeholds so that they're built, and then we need them to put those properties on the market. But when you have a declining rent, it ha- it inspires less people to go out and purchase those
Yep.
properties. So even though we're going to start to see lower rental prices, we're also going to see lower properties get built, lower condos, lower freeholds. And at some point, it's going to come to a head and we're going to be on that, upward swing again because there's just not enough properties for people again.
Yeah.
And immigration will come back again. And immigration needs to be strong. We have one of the largest cohorts ever of individuals, the baby boomers, like retiring now, and we need to fill in those gaps in our economy, and we need to get ahead of it. And the only way to get ahead of it is bring more people into the country to fill those jobs, so that when the baby boomers do retire, we don't have these massive gaps in our country. The only problem is it seems that the governments on every single level don't communicate with each other to make sure that we're getting ahead of what we need to, and we're just
Before it happens.
seemingly going through boom and bust cycles of always being too far behind.
Yeah, 100%. Well, thank you guys so much for joining us for our mid-month breakdown. We look forward to seeing you in February, where we break down all the numbers and really see how did January end up beyond just what the first half did. I'm Dylan Silbernagel. That's Matthew Gizzi. This is the Economics of Real Estate. We look forward to seeing you again next time.